and welcome to BQ Prime. I'm Dadia. Overall, if you see in terms of where markets go, clearly we are seeing profit booking that's coming in today's session, and there is pressure that has started to build up. Now, how sustainable is it going to be at current levels is something we need to wait and watch. IT, which is putting pressure in today's day after TCS earnings. To join us, and joining us on the show to discuss more in terms of stock specific action is Aditya Shah, CIO at JST Investments, joining in. Aditya, good morning and welcome to the show.
Thanks, Hiral, for having me.
Aditya, let's start off with a TCS. Firstly, the stock is under pressure in today's day of trade. And overall, what do you make of the numbers and the commentary that's come in? And secondly, in terms of change of guard that has happened earlier than anticipated.
The results as expected were weak. TCS has reported the lowest growth it has in the last 2.5, 3 years. And that was pretty expected considering the fact the carnage that is happening in the US banking sector and overall the US economy is continuing to slow down. Europe is also continuing to slow down and US is also continuing to slow down. We will see all through this year and maybe some part of next year as well that the IT companies continue to report weak earnings on the back of slowdown in the US. So nothing unexpected as such from the TCS results. In fact, the management was pretty unsure about how the demand scenario is going to play out, and it was pointing out to the fact that because of the slowdown, the managements are cutting down on discretionary spending. So overall, very muted results from TCS, and I don't expect at least for the next 2 to 4 quarters the company to report any significant upturn in the numbers. On the management side of it, TCS is a very big company and it has got depth in its management that the transition will really happen. There are XYZ number of reasons why Rajesh Gopinathan left. However, we need to look forward. We've seen that when Chandra went, Rajesh Gopinathan came in and tried to fill up his shoes. And as Rajesh Gopinathan will go in, the new incumbent CEO will come in and fill up his shoes. So I don't expect any problems as such. TCS is a very big company and they will take care of the management issues.
Right. Apart from TCS, you have the other stocks also, Aditya, which are down in trade. Tech Mahindra, Infosys, HCL Tech cuts to the tune of almost 2 to 3% coming in on these names. And you have an Infosys that will be reporting earnings. What would your advice be to investors to do with a TCS? An Infosys, I beg your pardon.
Infosys results will also be again muted. The constant currency growth will be anywhere between 0.5 to 1%, which is again very muted. The demand commentary again will be very weak, and we need to monitor the flight of top management also from Infosys into other companies, which is a key monitor. So overall, Infosys will also report not so great set of numbers, and the future commentary will also be weak. As such, there's nothing to complain about. All of this is very known in the market, and the stocks have already corrected 25-30% on the back of these expected weak numbers. If there's any positive surprise from Infosys, the stock would really go up. So all in all, IT sector, the near-term trend could be weak. But as they say, bad time for the business is a good time to accumulate. And if you have a long-term view, it's a good time to accumulate all of these stocks.
Right. Moving on, the fertilizer pack is up and about in trade for a second consecutive session with smart gains seen today versus yesterday. What would you advise investors to do with fertilizer names and any topics coming in this category?
See, what is really happening in the fertilizer space is that point number one, the gas prices have corrected. The government has pushed on the new gas pricing formula, because of which the major raw material for fertilizer stocks, which is gas, has corrected by anywhere between 7 to 10 rupees. So that's a major positive for these fertilizer companies, and this could lead to margin expansion. The first point. The second point is government is concentrating on the fertilizer stocks, and because of that, the demand will continue to come back as the government focuses more on the agri side of it. So overall positive on the fertilizer space. You can look at some agrochemical companies such as PI Industries, or you can look at companies like FACT. However, the view needs to be longer term and not shorter term. However, this gas price correction and government's focus on agri is a positive for the guys.
Right. Moving on, you have a AU Small Finance Bank, smart moves coming in here. And this is on the back of the reappointment of Ajay Agarwal as MD of AU. The stock has seen a good rally of almost 10 to 15% in today's session. In fact, there was absolute underperformance since the change of guard and the extension, I beg your pardon, was announced with regards to IndusInd. And since then, AU has been trading under pressure. How would you play a AU Small Finance Bank?
See, for a youth small finance bank, Sanjay Agarwal had the bank had asked for an extension for about 3 years, and the RBI has given exactly 3 years. This is in contrast to IndusInd Bank, where IndusInd Bank had asked for the 3 year extension for Suman Katpalia, and they had got an extension of about only 2 years. So RBI is clearly not happy with the events of microfinance that happened in IndusInd Bank. And for AU Small Finance Bank, the RBI has given the exact extension that as required. So all in all, this is very positive for AU Small Finance Bank in the sense that there is top management stability at least for the next 3 years as the bank embarks on the next leg of growth for them. So overall positive for them. Nothing to complain about. The bank is on a strong growth trajectory where deposits and loan growth have clocked upwards of 30% growth over the last quarter as they have released a number. So overall positive for a small finance bank. Good that the top management stability is coming in.
Right. Moving on, the Pharma pack has been up and about in trade in the last 2 to 3 trading sessions. Divis has given out a spectacular performance, at least from a stock price perspective. Biocon has been doing pretty well as well. Overall, if you see Lupin, that is something where there is an overhang with the Form 4833 that was issued with 10 observations for the Pithampur plant. How would you advise someone to play a Lupin, firstly, and secondly, your overall view in terms of what to do with pharma names?
First of all, let's talk about the pharma sector. We've seen over the last 1.5, 2 years, the entire pharma pack getting beaten up very, very badly. Stocks are down 50, 60%. Even quality names are down 50, 60%. So overall, from a valuation perspective, positive on the pharma space. On the Nifty index as a whole, the pharma pack is just now 4%, and Sun Pharma being the highest weight there. So overall, the pharma index has bottomed out. The pharma weight on the Nifty index per se has bottomed out. Where you can look to invest, you need to look to invest in the API space, CRAM CDMO space, or the diagnostic space. These are 3 or 4 interesting spaces where you can per se invest in. Per se, since you asked about Lupin, on Lupin, the US generic space continues to face pricing pressure, which is a key problem for Lupin. And for Lupin, another problem is their compliances. They're very, very poor at their compliances. Time and again, as you said, Form 483 has been issued to the Pithampur plant, and the Goa facility is also under observation. So try to stay careful with companies where there are US FDA or compliance issues. Lupin is one of them. However, the valuation of Lupin is now really very attractive. So any risk-taking investor who would want to invest can go ahead and invest. However, purely from a compliance point of view, I will not suggest to invest in Lupin.
Right. Moving on, you have Anand Rathi, which reported a fourth quarter number as well. Now, the profits have jumped almost 20-25%, and the company has guided for a 21% profit growth in FY24. However, if you see from an earnings estimate perspective, they've clearly missed the earnings on the profitability front. What would you do with the Anand Rathi?
So, per se, Anand Rathi is in the wealth management space. And in the wealth management space, we've seen a huge explosion of clients coming in and wanting to invest in investment products such as equities, insurance, debt, XYZ products are there. So, in my opinion, wealth management is a very interesting space. However, I don't have a policy view on Anand Rathi. Rather than this, I will try to invest in AMC companies which have derated about 30, 35, 40% and good available at good valuations and dividend. So all in all, I don't have a positive view on any company in the wealth management space. I would rather go and invest in an asset management space where earnings visibility is far better than an asset management, than a wealth management.
Right. And very lastly, you have rights that is in focus as well on the back of an order win worth 72 crores. Now, apart from rights, railway stocks have been buzzing. In fact, more from an order win perspective, because the kind of orders that are coming in from the Ministry of Railways also has been pretty huge. What would you advise someone to do with the rights? What would your view be? And any other picks coming in from the railway space?
See, railways is a very buzzing space. The government is spending 2 lakh crores of capex this year only on the railways. We've seen the Vande Bharat trains that are coming up. The target is to manufacture about 50 train sets in the whole of this year, and about 200 to 250 rail sets over the next 2 years. So positive on the railway stocks per se, because the government is spending a lot of money. And the second point is the dedicated freight corridor is also coming in. So in my opinion, these are all very positive things. How can you play this? You can play this through IRFC, Indian Rail Finance Corporation, Rail Vikas Nigam Limited, or RITES or IRCTC. Any of these stocks, if you're able to play, it is very good. Uh, However, these stocks have really run up over the last 6 to 12 months, where stocks have given anywhere between 100%, 50 to 100% return. So buy these stocks on dip, because valuations continue to remain very high.
Right. So buy on dip should be the strategy with regards to railway majors as well. One more track, Aditya, I want to discuss with you, which is up and about in trade today, is graphite and HEG. Now, both these companies as well usually see a very similar move, whether it's an uptrend or a downtrend. Today, both the counters are doing well. What is your view?
See, I don't have a positive view on the commodity space as such, because what is now really happening is that US Fed is increasing, has increased interest rate tremendously, and that will lead to a demand slowdown. Once there is a demand slowdown, automatically the demand for commodities will also start to come down, be it ferrous or non-ferrous, or be it the steel industry. All in all, the steel industry will continue to face severe challenges with respect to demand. The growth will slow down, and if the steel demand continues to slow down, the ancillary players such as HEG and graphite will continue to not do really well. So, in my opinion, any bounces in all of the commodity players are an exit route, because the commodity play per se will not do well over the next 1 2 years, as the Fed continues to fight against the inflation.
Right. And very lastly, moving these stocks apart, if you look at the consumption space, now that we have the inflation numbers, that the CPI was out yesterday, how are you viewing the consumption space? Any topics coming in there?
Uh, I'm really positive on the consumption space. We've seen that the rural demand has slowed down over the last 6 to 12 months, as inflation continues to keep cooling off, and you will see that price cuts coming in from various players. You will see that consumption will continue to come back. So where do we need to look at? We need to look at a company like Titan, which will continue to do exceptionally well and has no competition as such. Or you need to look at companies like companies in the QSR space, where you can look at a Domino's, or you can look at a Westlife, or you can look at a restaurant brand Asia, which runs the Burger King franchise. You can also look at an ITC, which has done exceptionally well over the last 1.5 years, where the stock has moved up from 200 to about 390 or so. These are 4 5 days that you can do on the consumption space. However, it will take time for the demand to come back, which is about 6 to 12 months.
Right. So that's with regards to consumption space as a whole. Thank you, Aditya, so much for joining us on the show and discussing those counters and what the investors should be doing with them as well. Thank you. Stay safe and speak to you soon again.
Thank you.